Okay, so let's get right into one of the most unbelievable market events in recent memory. We're talking about the silver freeze of 2025. Just imagine this. The silver market is on an absolute tear. It hits a new all-time high after this incredible year-long rally. And then, right at that peak, nothing. Silence. The market just stops cold.
Right, so this is the central mystery we're going to unpack today. On the morning of November 28th, 2025, with momentum at an absolute fever pitch, the main exchange for trading silver futures just shut down. I mean, the timing could not have been more dramatic, and it left everybody scrambling and asking the same question. Was this just some random technical glitch, an automated safeguard kicking in, or was it something else entirely?
So, what exactly happened during this market freeze? Well, in the overnight trading session, the COMEX, that's the big one, the main global exchange for metals futures, it just froze all activity in silver. For about an hour, the entire price-setting mechanism for the whole world was put on ice. Traders were completely and utterly blindsided. Now, for anyone who might not be familiar, a trading halt is basically the market's timeout button. Exchanges have these things called circuit breakers that pause everything if prices move way too far, way too fast. It gives everyone a second to breathe. But here's the thing. Context is everything. A halt isn't crazy, but a halt at the exact microsecond a market prints a new all-time high, that's what made this so strange.
You know, to really get why this halt was such a shock, we have to look at the incredible pressure that had been building in this market. This wasn't some random fluke. No, this was the explosive release of forces that had been gathering steam for nearly a full year.
I mean, just look at the sheer scale of this move. An 80% gain in less than a year is absolutely massive for any major global asset. A rally this huge is basically screaming at you that something fundamental, something deep within the market's very structure, had completely shifted.
And that fundamental shift, it really all comes down to silver's unique split personality. See, on one hand, it's this indispensable industrial metal. You literally cannot build our modern world, solar panels, EVs, 5G, without it. But on the other hand, for thousands of years, it's also been real money. It's that classic safe haven people run to when they lose faith in paper currencies. And in 2025, both of those drivers were firing on all cylinders.
And here it is. This is the absolute heart of the matter. For the year 2025, the world was on pace to use 206 million more ounces of silver than every single mine on the planet could dig up. This wasn't some small gap. It was a colossal structural deficit. And this is where you have to understand the difference between the paper market where contracts are traded and the physical market where actual metal changes hands. A deficit like this in the physical world means you're draining stockpiles every single day.
This chart really lays out the brutal math of that deficit. It's crystal clear. Total global demand was just dramatically outstripping any new supply coming from the mines. A situation like this simply can't last forever without the price reacting, and reacting violently, especially when the physical supply starts to disappear.
And this demand, it was exploding from every single direction. It was a perfect storm. You had industrial use surging 15% thanks to the green energy transition. At the very same time, investors were piling into silver-backed ETFs. And get this, even central banks were quietly stacking physical silver as a hedge against global instability.
Now, here's a critical piece of evidence, the smoking gun, if you will, that shows where this deficit was hitting the hardest. The Shanghai Futures Exchange, a key hub for physical metal in Asia, saw its available silver inventories plummet by a jaw-dropping 85%. Think about that. China, a massive consumer, was literally running out of physical silver, which forced all those buyers onto the global market, adding even more fuel to the fire.
So when you have a massive physical deficit, inventories that are literally vanishing before your eyes, and relentless demand from all sides, well, the market becomes a powder keg just waiting for a spark. It was really only a matter of time before the price was going to blast through its old highs and launch into totally uncharted territory.
Okay, so let's look at the timeline. Let's see how this powder keg finally ignited in those critical hours right before the freeze. The velocity of this final climb was just breathtaking. After hitting a new record back in October, the real launchpad came on November 27th. The Shanghai market closed at a record high, pushed by that shocking news about their inventories just plunging. That set the stage perfectly for the COMEX to follow suit, and as soon as overnight trading began, momentum just blew right past $55, And that's when it happened. Everything just stopped.
As you can imagine, an event this unprecedented, this shocking, triggered a massive wave of competing theories about what was really going on behind the scenes.
You can really look at the cause in 3 different layers. First, you have the official story. It was a simple technical issue. Hey, it's a complex system. Plausible. Then there's the more likely trigger, that the sheer speed of the price move just automatically tripped the circuit breakers. But given the timing, a third theory instantly took hold online, that this was a deliberate intervention to cap the price and stop the rally dead in its tracks. This quote from social media really captures the feeling held by so many longtime silver investors. You have to understand, for them, a belief has persisted for decades that large banks have artificially held the price down. So, a halt at the exact moment of a historic breakout? To them, there was no way that was a coincidence. It had to be an emergency brake, pulled to kill the rally. But it wasn't just the online forums that were buzzing. This quote here really captures the other dominant emotion across the board: pure shock and utter confusion. Even seasoned veteran traders were caught completely flat-footed, scrambling to figure out what on earth was going on.
So, all of this leads to the big one, the $55 question. Was this halt just a speed bump on the road higher, or was it a major turning point for the price of silver?
Looking ahead, 2 very different paths could unfold from here. On one side, you have the bull case. They say the halt was the ultimate proof, the validation that physical demand is finally breaking the paper market. If the price can just stay above that crucial $55 level, they see a clear shot to $60 and even higher. But the bear case? They argue that the halt marked a speculative top, and that a loss of momentum here could trigger a cascade of selling, pushing the price all the way back below 50. So ultimately, this whole incredible event leaves us with one crucial, lingering question. Was this just a temporary technical hiccup in a market with incredibly strong fundamentals? Or was it something more? A serious warning sign, a signal that the paper market is actually cracking under the strain of overwhelming physical demand? The answer, whatever it is going to have consequences that reach far beyond just the price of silver.